Hello everybody, welcome back to the messy chart that is Ethereum. Let's just roll those intros and dive on in and try and separate out this mess, shall we? So yes, welcome back. Thanks for joining us here on the charts. Let's just get up the current price and look at where we've been today. So the current price is 231, and in this Gregorian calendar day, we've got a full-on $10 range. That's a good solid 5% there, really more or less. And it's 224 up as high as 234 there. Of course, the current prices are in 231, so that's a 3.2% increase on the Gregorian calendar day. So that's where we are. That's what we're looking at. And on the 4-hour chart, you can see that. Pardon me, sorry. We come up here and we're in that sort of neutral area on the stochastics. Looking to test that as the prices have just dropped a wee bit over the last 4 hours. And in terms of the RSI, we've come up here and we have not actually tested off of the bullish control zone or anything, but we've come up here, established ourselves above this moving average and above the neutral line. So that's good. Could we see the prices, the RSI continue to slink down a wee bit towards the moving average? We could. I'm keeping my eye out at the minute really though to see if it can actually stay above this previous high over here on the 2nd of March. So, you know, if it can stay above that neutral line and that 52% thing, that would be overall quite good for the day, really, looking at in terms of the 4-hour time frame. So is there any divergences that we need to be aware of just since we're starting on this, we can look at this sort of the immediacy and see that while we have a high over here compared to this high over here, and this low over here is higher than this low over here, that you couldn't really say that there's any real divergences on the go, particularly. We could actually, sorry, I'm getting ahead of myself there, starting a sentence before I fully thought it through. On the MACD, you can see that that we're currently putting in bearish divergence if this were to be the case, if this were to be a local high and indeed the candle here to come down and maybe test off of this 230 area again, and then and before it decides where it's going, we could actually see the prices come back down and retest this triangular line here, which would and hopefully be testing it at that point as support. In terms of the stochastics and let's see, well, the RSI looks more or less okay. Let's just make it bigger and see. Indeed, of course, it's okay. So we're not got any bearish divergence there on the RSI, but we do have bearish divergence on the MACD, and it looks like we'll be setting in some bearish divergence potentially on the stochastics. Is there anything that's working counter to that? Well, you could indeed say so. You look here, you've got a tiny little purple splodge here, but no purple over that direction. And what do we have here? Only a low and then a higher low. So that's what you call hidden bullish divergence. And indeed here, that would be class A. Over here, you can see you've got sort of class B as the stochastics have come down to the same lows as before, whereas the price action didn't actually come down as high as before. So they tried as hard as they could to push the prices back down and to get to prevent a higher low from coming in, you could say, during this period, and to do so would have still been within the bounds of this triangle. But I say they, you know, it's this imaginary group of bears failed to do so, and indeed the prices managed to then come up here and looks like it's potentially breaking out of this zone. So we're yet to find out if that's a fake out, so to speak, or if that's the reality. So let's keep our eye out for it and see if it comes down here and tests off this line again in the mid 220s. That would be interesting to see. If it comes back down and then obviously goes up again, looking to try and create 230 as support, as we've been keeping our eye out for over the last wee while. Overall, do I feel like that we're probably going to break back towards the upside with this asset? I kind of do, but again, that's of course just my opinion, and we have to wait and see how these things all pan out. Is there any point, like I said in the previous episodes, of taking a measured move off of this consolidation triangle here? Not particularly. And if we go back up to the 24 hours where the chart is a bit clearer, you can see a bit clearer what we're talking about here. Now, could this end up ultimately being a fake out and coming back into it? Of course it could. Could it come down and test it? Of course it could, as we've been saying. Could it even come down as far as 221? Of course it could, as we've been saying. If it were to break down below that, then maybe you'd have be looking at a fake out at the top here and a legit breakout down below. But but I don't anticipate that happening. But if it were to happen, I'd most certainly be keeping my eye out for $211. Okay, but why would I not want to take necessarily a measured move off the back of this? Well, we saw that 21 EMA is areas up here where we've come to and tested off of, and that would have been an absolutely fine place to take profit at. You don't need to make the full moves ever, but indeed as well, you've got up here, you've got a 241, this 50% retrace line on the Fibonacci sequence that we've been using, Fibonacci retracement. So I would say that to come up here and test off of that would be satisfactory, and it really depends then on the subjective nature of these things where you were to have drawn your measured move in. For instance, if it were to happen now, you'd be looking further past the 241 area and up towards the 256. Now ultimately, of course, I do think the prices would go there, and you could debate with me and say, well, we had a measured move, but in the meantime, of course, I'm looking towards other areas of potential resistance lines, because in the Outcrop community, we kind of call those things profit taking lines. And of course, if you're taking profit here at the 50%, then you're not a fool at all, and of course it could easily be another re-entry here at 230 thereafter before going on to make this so-called measured move up here towards the 256, and that's kind of what I'm keeping my eye out for. And if that does happen at that stage, we'll have made it through all of this dearth of trading up sort of through the easy area, so to speak, for the bulls to push to, and then the resistance of the trading activity, as you could say, comes back into bear again once again, and you also have the downward sloping part of this descending broadening wedge to take into account at that stage. So we would be looking to see how the prices react around here. Then therefore, if this were to take a few days to get there, then 256 would be a very easy level to be saying, because it's coming in confluence with that area. But of course, if we come up here in the next day or 2 or 3, really essentially looking towards 260 as being that area for sort of greedy profit taking, 256 then potentially to act as support if we were to break out above this towards the upside. But of course, that is definitely counting your chickens before they hatch, and we can check back in again on this later on. In terms of the oscillators and stuff on the daily, is what we've been looking for. This came up sort of kind of rejected on its first pass, maybe not, depends on how you want to sort of squint your eyes to look at that. And now we're coming back into this zone. Will we actually get rejected on a proper first try here and slink back down a bit? Is absolutely possible. But then of course, if we make our way into this area, we could be looking towards, you know, a nice couple of weeks of upside here for us, and that would be good overall. RSI is up here. It got rejected off the neutral line here on its first pass, as it so often does. Now it's looking to see if it can try and attempt to do that once again, and the moving average is coming in there around about that time. Now I think you could probably look towards getting sort of 2-for-1s here on this. If we stay here for a day or two, we'll probably try and go to attempt to break both of them at once, but we could just see how that all pans out. I wouldn't be too surprised if that's what were to happen on our sort of second proper attempt. Of course, we could just also get rejected again, and then we know what we're looking for to the downside. I've already repeated that, just sort of throwing that out there for our information. And yeah, of course as well, the MACD sort of shrinking off as we know, because you can see up here that as the moving averages are getting closer together, of course they're converging. Now as well, just a wee sort of thing as I'll wrap up the episode here by saying, one, thank you so much to everybody who has liked and subscribed so far. Two, you're all amazing people, wonderful, thank you so much for that, and share this video with anybody who you also think might appreciate it, and try and do sort of FOMO-free, greed-free technical analysis here, and we never really get too carried away sort of talking about the moon and stuff like that. Of course, unless we're joking. And the third thing that I would say that I wanted to say here is that if you're talking about the moving average convergence, divergence, the MACD down below, that this here shows the convergence and divergence of the two lines, which I actually don't use on this here. So it shows you the convergence and the divergence of those lines of the moving averages. However, what I look for is divergences on the MACD. Now, when I say I look for divergences on the MACD, I don't mean, oh, last second as my thing ran out of battery. I don't mean that I'm looking for these things to get bigger, as in for there to be more divergence between them. I'm looking for divergence between the information that's seen on the MACD and the prices, in that classic sense of divergences there, rather than the actual MACD. So don't get too confused with that one. And thanks so much for tuning into this, and I'll see you in the next one.